Hi, and welcome to Market Conversations. Just want to do a quick video on First Republic Bank, FRC. But before I continue, just want to let you know that I am not a financial advisor. This is for entertainment purposes only. On Friday, the stock closed at $351, and it actually sold off after hours because there were news of it entering into receivership, which it did. The stock halted, and I was afraid that this was going to happen because I have experienced this same thing with Silicon Valley Bank. I had bought $6,000 worth of shares pre-market the day it was halted. Silicon Valley Bank halted, got suspended for 3 weeks, and it's now trading on the OTC markets, but not at the price that it got halted at. I just want to show you real quick. Silicon Valley Bank actually went down to $39.25, and this was once a $100 stock. You can see here, actually a $300 stock. It's no longer trading on the New York Stock Exchange. It's trading over the counter under the ticker SIVBQ at 51 cents. So a lot of investors, retail investors, lost a great amount of money. I didn't think this bank was going to collapse because it was one of the largest banks. And you can imagine what people were thinking when they bought into FRC. The same thing would not happen to FRC like it did with Silicon Valley Bank, and it did. To FRC, it actually got halted this morning, pre-market. This was very early on, 3:39 a.m. Pacific time, and you can see that people actually bought into the stock. Actually went up to 240, and I think people thought this would recover, but now it's halted. They don't know what's going to happen with the shareholders, but I can say that shareholders are the last to be paid out. Most likely it's going to do the same thing like Silicon Valley Bank. It's going to be traded on the OTC market, but I don't know. No one knows right now. All we can do, if you're holding on to shares, just be patient. I'm going to show you an article that just came out today from yahoo.com. First Republic stock investors face wipeout. JP Morgan Chase purchased First Republic Bank in the latest fallout from the collapse of Silicon Valley Bank. While JP Morgan CEO Jamie Dimon said Monday that the crisis is over, the same can't be said for First Republic investors. JP Morgan did not assume First Republic's corporate debt or preferred stock, meaning institutional investors will not be made whole. Neither JP Morgan nor the Federal Deposit Insurance Corporation have explicitly said what the purchase means for First Republic common shareholders. Those shareholders are not expected to be made whole either, though, according to the banking equity analyst team at Wedbush Securities. We expect a wipeout of common shareholders following FRC entering receivership and being sold to JP Morgan. Wedbush Securities analyst David wrote in a note to clients on Monday after entering the banking crisis at $115 per share. First Republic stock stopped trading on the New York Stock Exchange at $351 on Monday. Regulators seized First Republic early Monday morning and sold the majority of the bank's operations to JP Morgan Chase. JP Morgan Chase acquired $173 billion of loans and $30 billion of securities in the deal. The largest banking failure since 2008's financial crisis came less than a week after the company revealed deposit losses exceeding $100 billion in the first quarter. Since FDIC seized the bank, investors would need to file the grievances with the agency. Stockholders can file a claim with the FDIC to seek payments for the shares via an online portal or email. But on a new FDIC webpage answering questions for those impacted by First Republic's failure, stockholders are listed as the fourth and final group of creditors to be paid out. Depositors, general unsecured creditors, and subordinate debt would be paid out first. All of those claims would be paid out after administrative expenses, according to the FDIC. The First Republic banks themselves are still open for clients and operating as normal.